Time now to talk business as we take a look at the economy. Mervin Jebaraj, director of the Walton College Center for Business and Economic Research, joins us. Mervin, let's start with the state of the state. February state revenue report. It came out showing some year-to-date overall sales collections are up about 3.7%. Those strong sales tax collections and some strong income tax collections were in those numbers. Is it too simple to say that jobs are growing and people are spending their incomes, or is there more to it than that?
I think that is the underlying reason why you're seeing, the state recorded some pretty significant growth in particularly withholding income taxes. So that means more Arkansans have jobs. We've seen the unemployment rate stay really low. It's at 3.7% right now. It hovered around 3.4% for about what seemed like forever, which was a record low unemployment rate in Arkansas. So more people having jobs means they have more income. And when people have access to stable jobs, they feel wealthier and they're willing to spend more money too. So you'll see that in sales taxes, although that number, has been sluggish depending on which month you're looking at, because a lot more people spend money online and we're not really collecting a whole lot of taxes off of that just yet. But on the income tax piece, definitely more people having jobs means they have higher incomes, which means they're paying more state income taxes. Now, of course, with the unemployment rates as low as they are, there's going to be some amount of labor market tightness, so the state's getting a windfall in income taxes right now, and it's about how effectively they spend that windfall in investing in labor force training, higher educational attainment, so that we can continue to grow this labor force and don't choke on our own growth by having not much of a labor force to work in the state anymore.
Turning to the national picture, we got the revised GDP growth for the fourth quarter of 2017. We'll get, I think, one more revision before it's all said and done. In context, is 2.5% GDP, is that good, bad, or indifferent?
Well, that depends on how you're looking at it, right? I mean, if you looked at the first quarter of 2017, 2.5% GDP growth in the fourth quarter is really good. But if you're comparing it to the second and third quarter, in which we did 3.2% and 3%, and obviously 2.5% is a little bit disappointing. So what was good in the report was that we saw consumption expenditures go up. That means people like you and I are going out and spending money. Good job. We should continue to do more of that. The other piece that we also saw that was positive was that businesses were spending more money on investments. They were growing their factories and their manufacturing. And you see business investment leads to jobs in future economic quarters, so that's positive too. And the other piece was the U.S. dollar traded weaker for most of the second half of 2017, which meant that our exports had improved. So that piece of the fourth quarter GDP picture was really good. Overall, from 2017 as a whole, the economy only grew 2.3%. Better than the 1.5% in 2016, but not as good as the 2.9 and 2.6% that we had in 2014 and 2015. So, looking forward, we're hoping to see something like a 2.5 to 2.6% growth rate, a little better than the 2.3 we managed last year, but still nothing like what we want to see as an economy, which is upwards of 3% growth rate on an annual basis, and one that's sustained over a long period of time. So we're still a ways away from that.
Well, let's talk tariffs. President Trump wants to impose new tariffs on steel and aluminum. Resistance within his own party for this, we've seen. Many warning this could start a trade war. That said, some say it's time to stand up to some of these metal dumping nations. How will we see this impact consumers?
So there are several ways that this steel and aluminum tariff would directly impact consumers. If you start with the very basic goods, if you're going out on the weekend to enjoy a couple of beers, whether it's your Miller Lite, your Bud Light, or your favorite local craft brew, all of those are made using the same kind of metals. Your canned foods, canned soups, all of that is made using the same kind of metals. So all of those, you're going to expect to see higher manufacturing costs because of these tariffs. And it's a matter of waiting and seeing whether manufacturers push those costs on to consumers, in which case, we recently had moderate tax cuts for most Americans. If those prices go up, you'll see, your tax cut get eaten up by higher higher prices for the goods that you buy on a daily basis. If the manufacturers don't push those costs onto consumers and try to eat them themselves, then you'll see that eat into the corporate tax reform and the lower tax rates that they were getting. So either way, it affects the manufacturer and the corporate tax reform that they got, or consumers and the individual income tax break that they got. So that's the one piece of it, from the consumer side. The other piece is the construction industry uses about 40% of steel that is used in this country, and aluminum for that matter. And you're already seeing a lot of expensive input prices in construction, largely because there aren't a lot of fully staffed construction crews available in the country. So construction prices are already up. You'll see that continue to go up if these steel and aluminum tariffs go into effect. So that pushes up the price of construction for multifamily homes. That pushes up the price of construction for commercial buildings. Combine that with what we're expecting interest rates to go up. Building new multifamily buildings and new commercial buildings are going to get a lot more expensive. And then, of course, cars use a lot of steel. You'll see car prices go up as a result of it. Maybe consumers will buy fewer cars than they're used to buying. And, of course, there's also large equipment manufacturing like Caterpillar and John Deere. So you'll expect to see some price increases in that sector. Tools that are used or equipment that's used for earth moving as well as for agriculture. So price increases from this, it's going to happen to the manufacturers one way or the other. We'll have to wait and see whether that pushes through to the consumers, which very likely it will.
Well, history tells us that when tariffs are imposed, other countries typically retaliate with their own tariffs. How would you expect this to play out if this all goes forward?
So retaliatory tariffs are pretty much a guarantee here, right? So we impose tariffs on steel and aluminum coming into this country. Other countries that are our trading partners are going to impose tariffs on what they think will affect us the most. So looking back at 2002 when the Bush administration imposed steel tariffs, the European Union, which did not like the steel tariffs because it affected steel exports from Europe to the United States, retaliated in a politically motivated way. They hit the state of Florida with tariffs on oranges because they knew that Florida was important for presidential elections, and that got the Bush administration to back off in 2003 after 1 year of steel tariffs. So in this iteration, you'll see that there aren't exceptions for Canada, for example, and the steel tariffs imposed this time as they were in 2002. Canada actually imports more steel from the United States than we import steel from Canada. So imposing tariffs on Canadian steel makes little to no sense because if they retaliate, that affects the very industry, the steel industry in the United States that we are trying to help with these tariffs. But from a broader perspective, this of course affects Chinese steel coming into the United States. And if they want to retaliate, they would go after, states that were politically important in the 2016 election, like Wisconsin and Michigan. Maybe they go after the car industry or the dairy industry. And if they wanted to go after states that made up part of the administration's political base, for example, in Arkansas, they would go after agricultural products like rice and soybeans. So across the board, there are different ways for countries to retaliate, impose different levels of political pain to get the U.S. administration to back off the tariffs that they have imposed so far. So again, there's a wide menu of options for other countries to impose tariffs on us as well.
He's Mervin Jebaraj, director of the Walton College Center for Business and Economic Research. Thanks so much.
Thank you.